Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, there is a spread of trade disputes, reopening old feuds. But first in the US, job openings fell in May, pulled down by declines in the construction and transportation industries, potentially flagging a slowdown in employment growth in the months ahead. Job openings are a measure of labour demand, and they fell by 49,000 to 7.3 million in May. Their hiring rate fell by 266,000. And north of the border, Canadian housing starts surged to their highest level in more than a year in June, led by construction of multi-family dwellings such as apartments and townhouses. Builders started work on an annualised 246,000 units last month, a jump of 25% from May. One of the interesting regional aspects is that Vancouver housing starts are surging even more, up 72% year on year, even as the volume of resales of existing houses stays in the doldrums. In a new analysis, it is being revealed that the world's debt to China grew tenfold between 2000 and 2017, from $500 billion to $5 trillion, with 80% of emerging nations receiving Chinese funding as debt. And half of all Chinese overseas funding is outside the data captured by the World Bank and the IMF, raising concerns over transparency. On the sidelines of the China-US trade war, another one is breaking out and is taking a pretty nasty turn. Japan and South Korea are finding it easy to rekindle past enmities, and it is easily being expressed in trade and tariff retaliations. Samsung is Japan's target of choice. Now that the US has lost its credibility as a peacemaker, it is perhaps not surprising that this cultural animus is resurfacing. Talks are about to restart on the US-China dispute, but it is hard to see any likely progress. China is now demanding that the US withdraw support for Taiwan, and the US is demanding China buy their farm products before talks start. In Australia, the closely watched NAB Business Sentiment Survey shows the post-election bounce of confidence was short-lived. The survey results for June suggest that the business sector has lost significant momentum over the past year or so. Business confidence largely unwound the bounce in May, and while business conditions rose in the month, they remain below average. The recent run of results also suggests that their economy was unlikely to record a significant pickup in growth in the second quarter. And Standard & Poor's has today changed the ratings outlook for the 4 Australian pillar banks from negative to stable as a result of the easing of APRA's capital raising requirements. There's been no change to the core credit ratings, however, at this time. The US Treasury 10-year yield is now at 2.06%. Gold has little changed overnight, up $2 to $1,398 an ounce. And US oil prices are also little changed today. They're now just on $57.50 a barrel, while the Brent benchmark is still at $64 a barrel. And the Kiwi dollar is softer at just above 66 US cents. And the cross rates are actually marginally firmer at 95.4 Australian cents. And against the euro, we've dipped a bit to 59.8 euro cents. That leaves the TWI little changed at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.